Good morning, everyone, and welcome to this morning's webinar. Thank you, as always, for your patience. It's lovely to have you join us today. I think I just wanted to make sure two things. First, that you could see the disclaimer, and David tells me that you can. Plus, we wanted to get the recording underway, which I can see from my little tab here that that's underway as well. So there's no reason not to get cracking. But before we do, can I just remind you, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Those of you perhaps who have not been with us before, the webinar, this webinar is run together with myself and obviously my husband David. I know most of you know who we are, either because I can see we have some of our quantum users. I think I recognize some names from traders who've actually bought the books, and I think we've got some of our forex students here, forex program students as well. So I think we've got some new people as well. So a really nice mixture of traders, and also the nice thing about these webinars we find from feedback is that we attract both new traders and novice traders, traders who perhaps have been trading for some time and just come along to learn perhaps a little bit more about our methodology of volume price analysis, and to scope out the quantum tools that David and I have developed over the last few years. So just to carry on the subject of volume price analysis, this is the, if you like, the technical analysis side of our approach to the markets, forex included, and it's got volume in the title, and people say, well, how can you apply volume to the forex market? Because there is no central exchange, and today we're looking certainly in the spot market. And yes, that is absolutely true. And the volume that we use, that we analyze and we look at, is what is delivered, is tick volume, and it's the feed that our broker is delivering to us. And there's a difference in the quality of feeds. So we always suggest that you open any account with a good quality, fully regulated broker. And it's actually been established. There have been some papers and traders with far more experience that we have. The tick volume that is delivered in the spot forex market is good enough to use for volume and volume price analysis purposes. But volume price analysis, I said, is just one element of our approach to this market. We also have to consider what the fundamental news is, the fundamental risk, if you like, on the day. What are the news releases? But we also have broadened that out to include what we call the relational analysis, looking at the related markets, how the markets all interact with each other, what is happening in the bond market, what is happening in equities, because all these markets do, as I said, relate to one another, and price action in one will certainly affect price action in another. And to that we have to add political risk, and I'm sure you don't need me to tell you, with the tariff talks, the tariff war talks, if you like, Brexit here that we have in the UK. And yesterday we had a perfect example of one particular pair, the pound-yen pair, which was actually being driven on both sides, both by the market sentiment as expressed by the yen and the issues that we have in the UK here with Brexit. But all that is encapsulated in the Forex Trading Library, which is available on Amazon. It is the digital version of the books, and it's $9.99. So if you want to expand your knowledge of the approach, all the information is there on Amazon. And this is a slide from the Forex program where we go into these aspects in very, very great detail, price action, volume, and as I said, all the other related markets, and really what you need to know to become successful in this market. And finally, the quantum tools that David and I have developed, they're really there to support the methodology. They're not there to replace the methodology. All indicators are supportive, whether it's standard indicators or proprietary ones that we have here that we've developed for, certainly these are the Forex specific ones, and the ones that we're looking at them all today, but we always start with the one on the left here, which is the currency strength indicator, which tells us what the individual currency is doing in any particular time frame. And while I get my screen up and sorted with my charts, because I've had to pile all my charts onto one profile, and they look a real mess. So let me just sort that out. I'll just pass over to David, and he can say hi as well.
You can switch over. Thanks, darling, and a very warm welcome to you all. Good to see you. I hope the weather's as good as it is here this morning. Lovely, glorious day, sunshine, and hopefully going to be warm today too, so it's lovely down here in Hampshire. If this is your first time along, a very warm welcome. I know we've got a lot of regulars in the room, so welcome to you too. And if this is your first time, if you have any questions, please just drop them in the chat box. We're happy to answer them in that way, or alternatively, if it's a longer question, I'm just fascinated by the number of charts that Anna's got up, sliding backwards and forward. As you probably noticed over the time, if you've been coming along regularly, you know mine are quite neat and tidy, and I tend to be a little bit more messy. If you have any questions, the longer questions, we'll answer them on air for you. We focus primarily on two platforms here, primarily on MT5, but I've got the NinjaTrader running, NinjaTrader 8 running on my side, so we'll flip-flop between the two if we spot things that we can highlight various aspects of what's going on in the market this morning. Just a quick heads up to Brexit. I'm sure you're sick to death of it, but just to make you aware that if you're not aware, next Thursday we have European elections, and if the polls are to be believed, and it seems in this case they probably are, the mainstream parties here are going to get an absolute hammering, and the chances are we will see a lot of Brexit voting going on in the UK. So that is almost certainly going to impact the pound. Probably not so much intraday, but certainly overnight and into Friday. We're here next Thursday anyway, but certainly back end of the week there will be more volatility. So if you're trading the pound, just be aware of what's going on in Europe in terms of voting. I'm going to pass back to Anna, and we will get going.
What I've actually got up here at the moment is, in fact, a matrix. This is what we call the manual matrix of the pound pairs, as you can see here. And they're actually the daily charts, because it's the daily charts that I want to start with. As I said, with the pound yen, some of you may have read my little summary of it on one of the Facebook pages that I have. I think it's called Anna Cooling, Learn Forex Trading, because it was there was just some lovely VPA lessons, and also highlighting the amount of time that a market can stay in a congestion phase. Congestion phases are phases of price action that you see on all time frames on charts, and it's where the price is really range bound. It can be a very narrow range. I think we looked at the Aussie yen. Was it the Aussie yen a little while ago? I think the Aussie yen until about 6 weeks ago had been in the longest one of the longest phases of congestion, and not just congestion, but a very tight range. And if, as a trader, you are focused on maybe just one or two pairs, you're not like us. We look at the full spectrum of the 28 pairs. What that means is that the longer, and it's in a tight price range, and you just like to trade as I said, one or two pairs, it can be very, very frustrating, because if it's in congestion on the slower time frames and in a very tight price range, it's not going to move very far or very much in the faster time frames, and really, as I said, it'd be very, very choppy. So the decision as a trader is, do you then say, okay, you just be patient and hope that the pairs that you focus on are not going to be in this state for very long, or like us, you say, well, okay, I'm going to broaden my my search, if you like, for a trading opportunity, maybe not focus on 2 or 3, maybe 5 or 6, and just look for trading opportunities. But the first thing is you have to look at the slower time frames and just see what kind of market state, what is is the pair in a congestion phase. There's nothing wrong with it, as long as there is plenty of breadth, if you like, in the congestion. Then on the faster time frames, it will certainly, trading opportunities will be there. And given that markets tend to be in congestion much longer than, for far longer than they are in trend, as it were, understanding how to interpret the structure of a chart is really absolutely key, and using multiple time frames as well. And we always get, I particularly get a lot of emails from traders saying, well, this is my chart, the one chart, one time frame. Well, why did that happen? What's your view of this? And I always have to go back and say, well, that's awfully interesting, but one chart in isolation doesn't really tell you an awful lot. And as a trader, you really need to be looking at, well, I would say two, but I would say certainly three, from your trading, taking the trading opportunity, and certainly from a overall view is look at the daily chart. And I've pulled up the pound yen, but you can do this with any pair, any market really. And if you look at the pound yen, what we can see here, the congestion phase is characterized. We use the volume point of control here, and it is what we call the fulcrum of the chart. It's the area of the chart where we have the deepest volume in terms of transacted volume. This is the histogram over on the left, and it's where the market has been in what we call agreement. In fact, there's no clear divergence to push this pair strongly in one direction or the other. Now, congestion phases, a lot of traders think congestion phases, they worry about them, they don't like them because they're associated with breakaway, breakout trading, and breakout trading, well, you have so many fake outs. Well, given that, if the market is going to be in congestion 60–70% of the time, it's something we have to get a grip of. And as I said, well, you either try and avoid them and go and find something that is in a trend, or you understand them and you actually make them work to your advantage, because there are lots of advantages to trading certainly a pair once you do get a clean breakaway from the congestion. Now, to go back to the pound yen, I'm going to expand this in a minute, but I wanted to show you really the time that it was rotating around the VPOC. The volume point of control is in the 146, we can find here, sorry, 145.64 area. Now you can see here that there was attempts to rise, then it came back, then it broke down to the tried to break to the downside, then it went back to the VPOC. And if you look at the ranges of these candles on a daily basis, that doesn't mean to say there were not trading opportunities within these candles. What you have to be aware of is that the type of price action, when a market is in a congestion phase, it is likely to be what's called a lot of good two-way price action. A certain amount of choppiness. That looks like a nice up candle, but that would not have been formed in one straight move. There would be a lot of backward, a toing and froing, and certainly over the sessions as well. So we don't know whether we have no way of looking at that candle and knowing of the three main sessions broken into 3 8-hour periods where the majority of that price action occurred. It could have been in London, it could have equally been in New York. And this is another factor that you have to consider in this market, is where is the price action, where is the bulk of that price action going to come in the pair that you want to take a trade. And with the pound yesterday, we had a wonderful example where we had good moves in pound yen and in the pound Swiss in London. Really didn't do very much later on. The pound CAD, for example, didn't do very much in the morning session, but boy, oh boy, it really, it kind of caught up the other pound pairs later on in the New York session. So there we are. We've been around this sort of general region. We can see here also the candles, the spreads of the candles narrowing. The more they spread, the tighter the range, the trickier, the faster time frames are going to be. But nothing stays in congestion forever. And if I just expand that a bit higher, so we can see, and this is the trend. Really, this is the move that I've been following, and I'm actually short this pair at the moment. And once it does break away, what we need to look at from the perspective of volume price analysis, we can see here is the volume candles here. You see the spread of the candles, rising volume. That's great. So we know we're in a trend lower. We did have a bit of buying coming in on this candle here. The wick to the bottom of that candle, that would be the buying in the New York session, because that's the last session that's recorded in this daily candle. And you think, oh, great. Now we're going to get perhaps a reversal at this point. Now, this is just for, you know, a global view of what is happening for this pair, because I actually trade it on the faster time frame. Is that actually a potential reversal? Well, we can see lots of volume under here and a big wick to the bottom of that candle, but it's the next candle. This is Friday's candle, which is Monday, Tuesday, Wednesday, Thursday, which is really the key candle here. Look at the volume underneath it and look at the spread of that candle. That is what we call an anomaly. That does not sit right with that. If that was genuine buying, if you like, that candle should have been much, much bigger than it is at the minute. It's in fact one of the highest volume bars going right back to March, basically. And what that tells you on Friday is that whilst price support had come in the previous day and there had been an attempt to rise, that is telling you that whatever happens next is likely to be weakness. And that is what we had on Monday. We had this a big fall, a little bit of buying late on in the session. I accept that. Volume, candle and volume in an agreement. This candle is also very interesting as well from a VPA perspective. Slightly lower volume than we have on this candle, but look at the wick to the top of the candle. This is one of the candles that we explain in great detail in the program, because if you've missed this move, it can often be a great entry or a chance to get into the trend, because what has happened, we've had an effort to rise and it's really basically gone nowhere. Lots of volume, there's still a lot of selling pressure in there. So if you've missed the initial breakaway from the volume point of control, that is a candle that is well worth keeping in mind once a trend is underway. This candle to tell you perhaps that the bearish sentiment is certainly not on the term, but is likely to continue. This as a possible re-entry, and in fact this is yesterday's candle where we had slightly lower volume. The selling pressure is perhaps diminishing slightly. We've got a wick to the bottom of the candle, but this morning it's the price has opened within the spread of the candle, and really we have to know what is is this going to continue? Well, certainly the bearish pressure is on the, what you can say is on the wane. But given that the pound yen is driven both by the political risk at the moment that is going on with the trade talks, the yen is a currency of safe haven and also of risk. And at the moment, when you have a lot of yen buying, you know the market isn't in a very happy mood, as it were. And also we have the issue with Brexit as well. So that's what I wanted to say on the daily candle. So that's what's telling us what is happening on the daily chart. So I'm just trying to shut this down. And just to for comparison, the volume profile on the pound Swiss is slightly different, and also the pound Swiss had already broken away from the volume point of control. It actually, we've got a kind of a triple top across here. And it was the failure of that triple top and has been in a downtrend. It's hit the volume point of control and now it's trying to actually break lower. What's interesting with the pound Swiss is that it only has minor support here at 129.20, and of course, being the Swiss on this side again, it's going to be hit with market sentiment. The Swiss franc is also a safe haven currency, and it's also coincident not coincident, but when the gold price tends to rise, the Swiss franc also tends to rise. It's also had a correlation with the Swiss franc. Now, what's interesting with the pound Swiss is that if we look at the histogram of the VPOC we have in the background here, this is once again the volume point of control. You can see the deepest volume that we have here. This is the volume in terms of volume, price, and time. This is the time that the pound Swiss has stayed in this range, as it were. if it breaks through here at 29.20, what we have here is what we call a low volume node. Where you have a low volume node, where you can see here the histogram is much narrower, the chances are that will go through fairly quickly, because there's not enough there. There's not enough of a volume cushion to stop it falling. But the one I wanted to show you was because is the pound Canadian. Now you can't really see this because this is on a daily chart, but in that candle there, in the first part of the session yesterday, that's London and the London session, it really didn't register very much. It was only when New York came and it fell. And in fact, it's gone through a low volume node that we can see here as well. And again, we see the volume, the VPOT going back to about February, where it really just, not a tight range, but it just kept bouncing around. And we also have the pivots here that we've developed to help us, if you like, define the congestion areas. I also use fractals as well. And so you can have a defined ceiling and you have a defined floor. And once that goes through there, it's going to take a little bit more sluggish, if you like, the move, because there is this, quite sort of not deep volume, but it's there's no real. We've had the low volume node, so any move through there, I wouldn't say it's going to be a struggle, but it's certainly not going to be as fast as if that were a low volume area. So I just wanted to start with VPA before we looked at the actual indicators that we've developed to see what we perhaps should be looking to trade in the upcoming session. And just finally, before I pass over to David, I know I've gone on about the VPA, because I'm sure he's got things to say as well. The indicators that also help us are the trend dots here, which are now red. You can see here in the congestion phase how they go red, then they go neutral, occasionally they go blue, where are the blue ones up here, they go blue. There's all this flip-flopping, and also the trend monitor here as well. I know you have this period of red here, but really it didn't move that far. And then you had a lot of clear bright blue, which was this move higher, and now it's kicked into deep red as well. And finally, for where prices are likely to go, this is where we use our Camarilla indicator. The other key point about the pound yen yesterday was the S4, and the R4. They're sort of also considered to be price levels that once price gets there and breaks through, they're considered to be genuine breakouts. But we've actually developed a 5th and a 6th level. So where is the target down to the downside? Well, I've got 136.60, so 139.67, and that gives us some indication of where that is likely to go. David, do you want to say anything about that? No. Oh no, thanks. Sorry. One final point before I pass over. So go back to the matrix. We'll have a look at this on how we. What we've done with the indicators is basically this is individual chart analysis, and this is where you start. This is where we suggest all traders start, that you begin to understand the charts from a volume price analysis perspective. And then what we've done with the indicators is we've actually made our life a lot easier in terms of selecting perhaps an appropriate pair to trade. Excuse me. With regard to also, by looking at the charts in this way, understanding congestion periods, it actually makes stock placement a lot easier.
Just going back to the manual matrix, I haven't got anything to add to that because that was a masterclass in VPA, so I'm not going to try. All I would say is that just to go back to the manual matrix, which we've developed into the currency matrix, which does all this for you. But looking at those pairs, what's interesting, and it's one of the aspects of not only the matrix but also the array, is just to get a sense of whether sentiment to the pair and the currency that you're trading is universal, whether the buying or selling of that particular currency that you're considering in the pair is universal across the matrix. In other words, is everyone buying the pound or is everyone selling the pound? On the top line, clearly, everyone is selling the pound against those pairs, so cable, euro, and what's the top right one? Yen, of course, sorry. What's interesting when you move down to the bottom line, though, is yes, you've got selling of the pound against the Canadian dollar, but when you could pick out the pound Aussie, what's interesting about the pound Aussie is that clearly that heavy selling of the pound is not reflected so strongly in the pound Aussie. And the reason for that is because if you looked at the currency strength indicator on the daily time frame, on a slow time frame, the probability is that those two currencies will be moving in lockstep together. In other words, you've got selling of the pound and selling of the Aussie dollar, and hence you don't see a strong trend develop in that particular pair, which you need to know if your pair of choice is the pound Aussie, because clearly it's not the best selection because it's moving sideways or sideways-ish. And all really that is driving that is the differential selling in one currency that is marginally stronger than the other. So I would suggest in this case that the selling of the British pound is a little bit stronger than the selling in the Aussie dollar, and hence you get a slight downwards bias, a bearish trend starting to move, but very gently downwards, and certainly not as strongly as the others. And that's the reason, because those two currencies on this particular time frame are both being sold, and therefore all you ever see is the slight differential variation in strength between those two currencies. And it's just so important to understand this aspect of universal sentiment across the matrix for two reasons. First of all, because it will guide you to those particular pairs. And of course, all this is reflected on the CSI anyway, but it will guide you to those pairs which are the best opportunities. And secondly, if you're trading with universal sentiment, then the risk on that trade is that much lower, because if everyone is selling the pound or everyone is buying the British pound, then you are trading with everyone else in the market right now, and therefore you're not trading against the broad flow of sentiment for that particular pair, which happens. And that's what you see revealed in the matrix. You see this universal aspect of sentiment, and whether you are indeed trading with the flow or against it. Nothing wrong with trading against it, as long as you understand that you are, and then in the fullness of time, it probably will reverse and join the others. And indeed, as Anna said, on the pound CAD yesterday, very, very quiet in the European session, and then it picks up as the US session gets underway. And it's also another, what's nice about looking at charts in this way, and particularly across the matrix, is that you will see something reflected in perhaps a related pair, particularly where all the sentiment is universal, which will give you a heads up as to what is going on in your particular pair. It doesn't always work like that, but there are lots of signals and messages that you see in related pairs which will help to form your opinion, your analysis of what is going on in the pair that you have chosen to trade. Just very quickly, the pair I've got up on NinjaTrader is Euro New Zealand, because there was a really nice reversal came in, and I've been watching that while Anna was talking. It's developing nicely. It's getting down to the VPOP. Maybe we'll switch over onto my side. I don't mind. Do you want to stay with yours?
I'll do that. I'm just going to do this.
Okay. I'm just going to pass back to Anna. Just pulling some charts in for you and sorting them out. And really, just to go back to the point I was making, if you look at the automated currency matrix there, albeit it's a completely different time frame, it's on a 30-minute time frame top left above the currency strength indicator. But you can see there the sense that where the strength of selling is, where there is maybe some mixed sentiment which hasn't yet fully developed. So at the bottom there, you've got the pound New Zealand, the pound CAD, and the pound Swiss. The pound Aussie is currently sitting mid-table. It's hopping around a bit. And if you look at to the bottom at the CSI, you'll understand why, because there you can see generally the yellow line and the blue line, in other words, the pound and the Aussie, are sort of moving together. They're not perfect, they're not moving in parallel train tracks, but certainly they are moving in the general same direction, and therefore that's the reason that you see the pound Aussie sitting in mid-table there in a sort of faded orange, neither one thing or the other. And that's the reason you also see such strength in the others, because when you look at the pound against New Zealand, for example, you've got the New Zealand rising very strongly, that's the white line, crossing very strongly against the selling on the British pound. Where are we with the euro pound? What's interesting about the euro pound, there you can start to see, yes, we've got strong selling of the pound, but we're also starting to see selling of the euro coming in. So it may well be what we'll see in due course is that euro pound will come off the top of the ranking ladder and will start to float down towards mid-table, because if the selling in euro is just as strong as selling in the pound, then it's going to sit in a congestion phase for the time being. So you're always looking for those opportunities of currency pairs to avoid, which perhaps are not giving you the best opportunities, and those which are giving you the strongest trend, and also whether the sentiment for the currency you are considering on the currency pair are universal across that particular matrix. I'm just eyeballing over onto the other time frames we've got running here.
Sorry, Diana, just moved the.
That's okay.
Do you want to talk about that's why I put the array up?
Yeah, and that's the currency array, and what the currency array does is not only does it reveal that sentiment, that universal sentiment. So what you expect to see, the easiest example for those who've got the currency array, the easiest example to look at is always the yen, because the yen is the counter currency, and therefore if sentiment towards the yen is universal, thanks darling, if sentiment towards the yen is universal, what you expect to see is all the yen pairs on the same side of the midpoint. So they're either all above or all below. Now it may well be that there is heavy buying or heavy selling of the yen, and one of those pairs is yet to catch up. So for example here, we've got very strong selling of the Aussie yen and the pound yen at the bottom, and New Zealand yen to some extent. The other pairs are sort of floating around in mid-table, and indeed the CAD yen, we've actually got some buying of the CAD, we've got selling of the yen, but it's not particularly strong. It hasn't moved to the downside. So whereas all the other pairs are seeing strong buying of the yen, as far as the CAD yen is concerned, there is some selling of the yen there. Now that may be as a result, and this is where it comes down to the unraveling, if you will, of what is going on, the investigation aspect. You would then perhaps go and look at the CAD and pick that apart as to whether the strength of buying in the CAD was across that particular Canadian complex, which was what might be helping to prop up the CAD yen, for example, or whether potentially, and this happens a great deal, is the CAD yen could be leading the others in a reversal. In other words, the CAD yen is the first to react, and you're seeing selling of the yen there, and over the course of time you may see all the others which are now below the fulcrum, the midpoint of zero, gradually swing up to join the CAD yen, if you like, above. And that is down to chart analysis, it's down to volume price analysis, it's down to what is going on in terms of the price action and everything else, and looking at everything over a multiple time frame, from the CSI, the matrix, the array, possibly even the heat map if you're looking at a slower term time frame. And in addition, what the currency array also reveals, it reveals strength of trend, because the stronger the trend, then the steeper will be the line. So we know for a fact, without looking at a chart, that the strongest trends right now on the 30-minute have been and may continue to be certainly in the Aussie yen and the pound yen, and less so in the New Zealand yen. And the other thing also the array shows you is it gives you a sense of when currency pairs are moving into overbought and oversold states. You'll see alongside the ranking ladder, which reflects those positions, if you will, on the array, on the second rank where you see the little brackets, that is giving you a sense of potential opportunities for reversal. When they're in brackets, it's just telling you that a currency pair is perhaps approaching an overbought or an oversold state. Once they move to a bright color with no brackets, as indeed we've got here on the pound CAD, you can see they're at the bottom in bright red, no brackets, bright red, OS, oversold. So the pound CAD is potentially one that you might look at as a potential oversold situation, and looking for a potential reversal to buy that one in due course. It's a very powerful indicator. Right, just hand back to Anna.
And just a couple of things before I move over to David's chart. The issue with the yen, if they're all with the yen, as I said, it's an expression. The currency is also an expression of sentiment in the market. It's bought when it's risk off, and it's sold when it's risk on. So that also, as I said, understanding the role that these the currencies play in the broader market as well. So basically, if the yen is being bought heavily, we know that equities are not doing very well. So that's the currency array. What we've also developed is individual indicators for the individual currencies. This is the pound index. I'll just take it off docked because I won't be able to change the time frame, and it's disappeared. Has it gone? This is, I have to do this, otherwise I've got too many. I haven't. That's it. So I'll go to just move those out of the way. There we are. I'll just change that so it's to 30-minute, and it simply tells us what is happening to the pound, just generally. And we can see here we've had a congestion phase for the pound. This is 30-minute, and now it looks to be breaking lower. We don't know what it's breaking lower against the most strongly, and this is where we have to go back to either a manual our manual matrix. Change that back to docked over again. There we are. Where is it moving most strongly? And you know, that's what these tools have been designed to do, and it looks as though it's certainly against the Canadian, and we've also got some movement against the Swiss franc, which we can see here. There we are, we're breaking through, and the target for that is 29.20. I'm just going to pass over to David. He's got NinjaTrader, and as I said, are you looking at the Euro New Zealand, David? Yeah. See what's happening there.
Just swapping over to NT8, bear with us a moment, and just to confirm with regard to, just click that, show my screen, should be coming up now, hopefully. Has my screen come up, Dunning? Yep, okay, brilliant. Just to confirm, the pound index, we've now completed that for Ninja as well, so if you have the full package of Ninja indicators, then you'll get the pound index added automatically. And of course, the same applies if you have the full package of MT4, MT5, exactly the same way. Just wanted to start with the CSI. The pair I've got up on multiple timeframes is the Euro New Zealand, and the reason I pulled that out is because when we started here, I had my eye on it anyway, because the Euro was pretty strongly overbought. New Zealand dollar was very strongly oversold and was just starting to kick up. And it's something that you have to decide for yourself. Do you want to look for reversals, or do you want to look for trend opportunities? And I always look for reversals first. So when I'm using the CSI as my starting point, my eye is always looking at these extremes. That's the first port of call, always, every single time, because I want to get into trends early. I don't mind sitting around for a while. I don't mind having wider stops, which is the price you pay of entry. But your entry ticket is higher. I made the analogy last week that if you want the best seats in town, you pay a price. It's exactly the same here. If you want the best seat in the market, you've got to pay a price of entry, and that price of entry is higher because your stop loss is going to have to be wider to allow for all the buffering and congestion that goes on before a currency or currency pair starts to move. I'm prepared to pay that price. I've been doing this for a long time, but that's just the way I like to trade. I always look for reversals, because once the reversal starts, as we've got it going on now, you maximize the return that you're going to make from whatever position you've taken in the market. This is the one I'm following right now, Euro New Zealand. I've got it on multiple time frames. I've got it on 5, 10, 15 across the top 3, 30. I've got the Renko running in the mid table here, and I've got the daily chart over on the right hand side. And it's just a great example of many, many different aspects. First of all, the reversal aspect, if you want to get in early, terrific. That's the way I like to do it, but it's not the only way. As I say, you can now jump on this trend. In jumping on this trend, going back to what Anna was saying about looking for entries in terms of if I haven't taken the decision to get into this as a reversal, where would I be looking for an entry? And these are the sorts of typical candles you're looking for. You're looking for, certainly in a bearish trend at any rate, where the market's going to be much faster moving. Then you're looking for these sorts of candles, effort to rally. failed, decent volume under the candle, looks like further weakness to come. Yeah, off we go, down we go, and so on and so forth. And you're constantly looking at the volume profiles. You've got to be aware of the fact this is 8 o'clock. So we've moved from, this is 7 o'clock, so this is the European Open. So the volume here is all comparable. We're now moving into a session where we've got London volume. So, yes, we can look across this, but in true terms of what we're comparing light with light, we're really just limited, certainly in terms of a 5-minute time frame at any rate, to these 3 candles here. That's from a comparison point of view at any rate. We're also very conscious of moving through a session crossover and the opportunity for reversals, etc. But in this case, we've just carried on straight through, which is great. So we're now riding the trend. If let's suppose, for example, we're still not in this trend, then we've got to wait and be patient. We've got to wait for a reversal. Check out the volume, see if we're comfortable with the fact that maybe we're halfway through this trend now, certainly in terms of the sort of 10-15 minute maybe, and so on and so forth. What we're also seeing is the classic ripple through of a trend as it develops. You can see that in many different ways. We've got the trend monitor. We went straight through. Indeed, on one of the pairs Anna was looking at on the slower time frame, I think it was pound Swiss or pound CAD. I can't remember off the top of my head, but certainly it went straight through. We didn't have any transitional change. It just said, hang on a minute, we've gone straight from bullish. This is a bearish trend developing pretty strongly. In terms of the 10-minute, we had some transitional color going on here. But if you're seeing that going on here and you're seeing that here, that is really helping to either get you in or help to keep you in. Now we're starting to see that transition flip through over onto the 15-minute. Nothing's changed much on the 30-minute. You wouldn't expect it. What also caught my eye in terms of the 30-minute was the fact we had this almost perfect 2-bar reversal here. Overlay one on the other, and you've got an upthrust of significance. And that's something you have to do very quickly, very easily. You can do it with 2 candles. It's far more difficult to do it with bunches of candles, but I can assure you, you'd see the same sort of price action. For example, on a 5-minute chart, this might be spread over 30 minutes, where you had a little rally and a little fall. Well, if you put that on a 30-minute chart, then you're going to see something like that. And that's the power of using multiple time frames. But always look for the 2-bar reversals. They're very common and they're pretty powerful too. What we're seeing now on the 5-minute time frame, just to hop back to that, we're seeing rising volume, that last candle, nice deep candle, little wicks to top and bottom, nothing much to worry about too much there. And we've got rising volume, but then we expect to see rising volume anyway because we're in the London session. What's also interesting, we've gone straight through the volume point of control, which is unusual, got to be honest. This is the volume point of control here, heaviest volume. We went straight through this platform of potential support up here. We sliced through that. We've also gone through this deeper one down here, this blue dashed line, which, as you can see over on the left here, actually acted as a support platform and stopped the market falling lower at that point. And this occasion, we've gone straight through on strong volume. So it's still looking pretty bearish at the moment for the time being. And all of that you can then blend with the Renko, which I've got running here. This is the Renko optimizer on NinjaTrader, where the indicator itself delivers the optimal setting. All you do is you just go and select the time frame. So we go to 1 minute, and that will then confirm the time for the pip values to set that so that you're trading at the optimal speed with that particular pair at that particular time of day. And the Renko is just a really neat way of smoothing out the price action. Got the trend dots running here. You can see we went into a little bit of a color change here. As Anna said, these trend dots work very, very close to the market, very close to the price action. They are the first signal of pauses in price action, but as you can see, they're very close, and you will get these very fast changes, then back into red again. But in terms of the trend monitor, absolutely nothing through any of these congestion periods, these little pullbacks that are inevitable. Here we had another one, no change on the trend dot there, minor one here too, no change there. The trend monitor will always react more slowly because it takes a more considered view of what is going on in terms of the price action. And as you can see, we've got the accumulation distribution working up and down the charts as well, delivering those levels. This is a pretty strong level up here. This was tested 7 times. So that's a pretty strong area. These other areas down here are pretty weak. This has now been tested once, this price level, because the market's tested it and it's held for the time being. So that's a a oneer. It's for those of you in the UK, apologies, I've used this analogy before. For those of you outside the UK, probably haven't got a clue what I'm going to say, but it's conkers. We have in the autumn, and the chestnut fall off the chestnut tree, and we well, it used to be, I don't know whether it still is, but conkers was a very popular game. You put a conker on a piece of string and bake it in the oven, and then it would be a oneer or two, and if you managed to smash somebody else's, then it would increase in value. Similar sort of approach here. What are we seeing right now? Seeing a minor pause point developing. And of course, the other aspect to all of this is, just move that out of the way, the chat box. There we go. Really just get a sense of where we are in terms of the dailies. And what's interesting is that in terms of daily price action, this was an initial signal of weakness. Certainly we had a big up day, and there's huge candle, a huge wick to the top of the candle. It's not signaling that the market is going to roll straight over, but it's certainly a sign that there is weakness starting to enter this particular market. We've had a pretty strong rally in the pair, gone all the way from 1.63 up to 170 odd. So it's been pretty strong. It's not to say it's going to come to an end, but certainly in terms of volume price analysis, it's very much about the signals. As we say in the program, as we say here all the time, it doesn't mean that you're going to see an instant reaction to that signal. It's very easy when you first start to see a signal and immediately jump on it. And we do get a lot of emails about it, but that, that's a fact. You do occasionally get what we call V-shaped rallies. In other words, a signal comes in, maybe it's a hammer, maybe it's something like this, and the market instantly rolls over and sells off in the other direction or buys in the other direction. It does happen, and the argument is always, well, if I don't follow that, then I'm going to lose out. You will lose out on those opportunities when they come, for sure, but they don't come along very often. It is far more normal and to be expected that a signal arrives. The market may even carry on in the same direction for a little while, but it's a signal of potential weakness. Generally speaking, the markets will move into congestion, whether it's pairs, whether it's indices, stocks, whatever it is, exactly the same principles. And then the market will start to reverse and maybe trend in the other direction. So all I would say is when you see a strong signal, don't react to it immediately. It's just a question, and indeed what we're seeing right now, I've just opened the 10-minute up here. Let's just pull that up a little bit. It's a little bit distorted by this absolute ton of volume that came in here on this particular candle where we had the volatility triggered. And rest assured, traders would have been, this is middle of the night our time, this is 2:30, 2:45, so this is in Asia. Ton of volume comes in, market reacts very strongly, jumps to the upside, traders jump in, and then trapped in this congestion phase, which just about has been cleared. What we're starting to see here, and it's no surprise, we've got, this is 8 o'clock, so it's back to London open here again. So we're seeing rising volume. But on this last candle, what have we got? This is on 10-minute. We're starting to see a little bit of buying coming in under that candle. We've got a decent wick to the lower body, and we've got some pretty good volume to the underside of that. So there's certainly some buying coming in here. What's also apparent is we've got the volume point of control. So we're trading around a pretty heavy volume area anyway. We've got some very strong volume below. And we've also got 3 or 4 pretty strong areas of price-based potential support. One of them is here underneath this node here. We've got another one here, and we've got an even deeper one down here. Pretty strong, those regions. So, it's just a potential warning sign that we're starting to see maybe some buying coming into this market. Maybe that move is now starting to come to an end. You'd be over on the CSI, you'd be looking at all the other indicators just to get a sense of whether this is now coming to an end. Is it a good place to be getting in? Are you going to close out? If you got in at the top, let's just have a quick look at the CSI. Let's see what's going on there. That's on 5, 10, and 15. Let's just head over there. There we go. This is where we are, Euro New Zealand. This is on 15. You can see it's still continuing. So for the time being, that looks okay. Let's just go to 5. Which is the one next door, see what that's telling us. That may well be getting to a state where the two pairs are now reaching overbought and oversold, which indeed they are. You can see we've had this nice ride up. The New Zealand, the grey line is now deep into overbought, and the euro hasn't quite got into oversold, but it's certainly starting to kick up a little bit. And that's why you are starting to see a potential reversal. Now, if you're running the CSI in multiple timeframes, as here on 5 and 15, you may be comfortable sitting through what is likely to set up as a potential reversal to the upside as far as the Euro New Zealand is concerned, or it may simply be a pause point. But at the very least, it is telling you part of the reason why that particular pair that you were trading short is now coming to a little bit of a pause point and possibly a reversal. And the same is true of the British pound. We've had this very steep fall right the way through most of the morning. It's now heavily oversold. And if you're looking at this from a reversal perspective, you're possibly looking at the New Zealand dollar up here. You've got the Canadian dollar joining it as well. Looks like we've got some decent buying in the Aussie. And we've got the pound at the bottom. So you might look at that as a reversal, or you might look at a potential crossing opportunity. And that's really all this business is about. If you look at the Aussie, for example, it's rising with the Swiss, it's rising with the yen, it's rising with the dollar, and it's rising with the euro now. And it's also rising with the Canadian and the New Zealand. So in terms of Aussie, it's quite limited, because you might say, well, I'll go and look at the Aussie pound. Well, you could do, but then the pound itself is very oversold. And the possibility is that that will rally. So in terms of an opportunity there, I would suggest the Aussie is certainly not one to consider. So, you know, there's better pickings elsewhere, whether you're looking at it as a trend opportunity on the CSI on this particular time frame. We go up to the slower time frame, it's go up to 15, see what's happening there. This is the Euro New Zealand, that's the Euro. It's still falling, New Zealand is rising. But if that reversal on 5 does take shape, then what you'll see on 15 is you'll see these start to flatten off a little bit. And at that point, you've got to make a decision as to whether you believe this trend is going to continue further, or whether that reversal that you're seeing on 5 is actually going to translate through onto 15 and become a reversal in the opposite direction.
Okay, that's it.
Right, that's it. I'm going to pass back to Anna.
Brilliant. And I've just got the pound, as I said, the British pound matrix up here as well. This on the 30-minute pound index, it's still falling quite sharply, and on the 6-minute on the matrix, as we can see here, we've got the CSI. This is the yellow line. That's the British pound, and you can see it's pretty heavy pound selling. Obviously with the euro pound at the top, because that's the inverse. One final thing about overbought and oversold. You can see this falling, and yes, we will expect a little bounce, but if it's also falling sharply across the time frames, in the slower time frames, any sort of bounce is likely to be very short-lived. Markets can stay overextended, overbought, oversold an awful lot longer than we can stay solvent. So the reversal, if and when it comes, you know, it's going to have to be even more patient. And again, it depends on your time horizon. If you're trying to take a scalp down on the seconds chart, as you can have, a NinjaTrader has seconds charts, or on a Renko on a non-time based chart, that's fine. But you know, when it's when you're looking at a chart such as this one, which is the pound Swiss here, and the daily is you know, big flat bottom to the candle, then that is telling you that you know, the market is very heavily selling the British pound. And what the matrix does, it highlights where the strength of that selling is, what against what. The pound yen has now popped down to the bottom. We've got a value of 21.54. That's a very high, you know, you look at the values on the those values play a part in as much it also helps you to gauge the strength or otherwise of the selling and of the buying. And if we move to the array, in fact, the pound CAD is the one where, if you like, there is the most momentum. But you can see here, it's pretty much apart from pound Aussie, and as David said, it's because that's in congestion. But that's also suffering from the fact that the pound of the Aussie was sold off quite heavily overnight. So there's no divergence. You've got two two currencies both on a sell, and they're not going anywhere. You know, there's no force to drive one in one direction or the other. Anything else you want to add to that, or is that's it? Brilliant. Okay. Very quickly, just to recap on what we've covered in terms of the indicators. From Quantum Trading, as I said, this is the site, and you can see here we've got NinjaTrader, Ninja, and we've also got TradingView. We must actually do some TradingView charts, because although not all the indicators, it's not been possible to port all the indicators over to TradingView because of the script that that TradingView offer for writing the code. So it's not as it's just different from Ninja and MetaTrader. But the one advantage of TradingView is it is available on a Mac. You don't, with the other indicators, you can run on Mac, Ninja and MetaTrader, but you have to run, you have to get parallels, and you also have to get a Windows license as well, because they're only for Windows. So that's TradingView. We are also working on TradeStation as well. If you scroll down, the individual indicators are featured in more detail, and if you click on one of them, on any of them, I've got the VPOC up here, there are all the videos about the indicators, what they do, how you can use them, and all the written support pages as well. You can buy one indicator, we have little bundles of indicators, or you can buy the whole package, and there are advantages to, if you're starting with one, just road test the indicator, see what you think. And the indicator that there's a couple that we always say that go for. First of all, certainly a CSI for forex, and possibly a volatility indicator. But if you buy one or two and then you want to add more, you want to upgrade, you'll always be given a credit. A 7-day money back guarantee. Our support team work 24/7. If you do buy the package, as David said, when we do develop a new indicator, as we have done with the British pound here, as we can see, it's still sort of falling. This is the 30-minute. Looks like perhaps a little bit of buying might be coming in now. That is automatically added to your package. You don't actually pay us any more money. And finally, the program, it's on a separate site. The details, it's Quantum Trading Education. There are 5 basic modules with, I think, the total number of slides that comes is 7,000 altogether. It seems a bit overwhelming, but I can assure you we've had some fantastic feedback from students, and you just take it at your own pace. And it's the sort of it's the knowledge and expertise that you will have for life. But the total cost of the package does include the indicators as well. You can choose whether you want the MT4, the Ninja, and TradingView. And there's all slightly different prices, the TradingView one being the cheapest one. Anything else you want to say, David? No? We are back later on for the US session. We will see what happens then. Thank you so much for coming along today. I hope you enjoyed and perhaps learned something that you didn't know before. And as I said, if we don't see you later, we will catch you again next week. So have a great trading day. It's certainly fun, and a lot of fun and games at the moment, but then trading it should be fun and it should be enjoyable. So take care.